Good morning, everybody. It's Monday, September 9th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down a half at 405 3/4. November soybeans were up 8.5 at 1013.5, and December Chicago wheat was up a quarter at 567 1/4. This morning, the USDA announced an export sales announcement of 132,000 metric tons of soybeans to China for 24. Good morning, guys. Hope everybody had a nice weekend. A couple of things we're looking at here this morning. We got a tropical system developing down, on the coast of Mexico into Texas. There's talks and projections about where that's actually going to be directed. It's looking to kind of come north and head east up through Louisiana. And I think the big talking point we had this morning, Dustin, I'll shoot to you to start, was, is the potential to fix some of the river levels. Mississippi is very low, obviously through harvest. Good majority of soybeans will move south through down the Mississippi there. So maybe a few thoughts to kick us off this morning, Dustin, and we'll throw around the room.
Yeah, Dan, thank you. Yeah, the current path of the storm looks like by Saturday it's going to be going straight up the Mississippi. Hard to say. Like right now, the forecast through Monday the 23rd actually has us continue to fall. We're looking at like just the the NOAA forecast. So as of the latest reading, we're at -708 for Memphis. And we're projected by Monday the 23rd to be -8.8. So it doesn't seem to be impacting that forecast much yet. But we have seen some spread narrowing lately, like the Dees March, back in, off of its lows here from a week and a half ago. Last year, river levels were extremely low as we got into first notice day, but they had been all the way from September to October. They just kept getting worse. And it wasn't until the very last few days going into first notice day that we hit spread lows. And we chalked that up to a lot of just a positioning problem. There was too many long futures holding to the very last moment to roll Dees in the end. And that kind of pile drive of short spreads and shorting all happened at the very end. And it seemed to be the same case with this last contract, the September contract, where we had actually back in July, we had going all the way up to 7 under SEPTA Dees. And then we just traded the week going into first notice day 26.5. So I don't know. We'll see. This is going to have a big impact on things like crop insurance. If that December contract has extra weakness, it's going to have a big impact on post-harvest logistics. The question is to lock in spreads now or wait. So that's a big part of our focus, just because we're so close to crop insurance payments for many people. Anyone that's got a larger than an 85% policy certainly is a contender to see crop insurance. Different parts of the country, like southern Minnesota or parts of Ohio, where we've had some weather issue. Those people are also looking at what their impacts of crop insurance should be. So that's kind of our focus right now when it comes to something like this. What kind of impacts it's going to have on the river system.
That was interesting to see too over the weekend. Former President Trump was at a rally and started. It was the first time we've heard that his plans of 100% tariff on countries that shift away from the U.S. dollar. And I thought that was interesting, Dustin, because you've referenced it a number of times, about the dollar and just, how directly impactful that could potentially be on our markets.
Yeah, I mean, we've seen like BRICS and, definitely, we've heard the end of the petrodollar. The dollar is been very stable in that, like, the world's gravitated to the dollar for a number of reasons, but stability, number one. And we've really kind of been almost spoiled from the dollar stability in the last 30 years. We haven't really had, double-digit inflation to consider, or, that longer-term impact of the dollar. You go back and look at a chart of where corn was trading, back in 2019, for example. $4 corn in 2019 bought a lot more goods and services than $4 corn today, right? And so does trendline yield make up for that loss of purchasing power? That's kind of our question. Is like maybe flat price has gotten ahead of its skis a little bit here, where things like labor, land, those things just aren't going to come down globally fast enough to justify a long-term sub $4 corn environment in the future. Trendline yield offsets some of that. You hear the old, stories of tractor cost me this much this many years ago, and the same price of bushel of corn, but the revenues have exploded from trendline yield increases. At some point there's like where we kind of overshot that whole argument though, where it doesn't really matter that trendline yields are up. We still have lost so much purchasing power of the dollar that we need higher flat price to be sustainable in the future. And I think we're at that point. Anyone that questions this, go back and look at what it costs, to break even in Argentina over the last 20 years, or in Brazil, where these currencies have not been so stable, right? Like we have had a completely different pricing environment for those countries in their local respective currencies. And when we come out of a period of a 30-year stability timeframe for the dollar into, rampant inflation that's really has been kind of hard to control across all asset classes, I think that there's still a debate to be had on both sides of the argument where the fair price of corn is going to match up for the next couple of years going forward. And in my personal opinion, again, it's just my opinion, I look forward to like the DEES-25 and DEES-26 contract and thinking we've got to really do some stretching to make 25 and 26 work without some sort of question about future supply crunches where demand might not be met with enough supply at these price points.
That's good stuff. Ben, what's on your mind out east to start the week?
The first thing is you brought up the storms coming into the Ohio River Valley. I think there's a point of diminishing returns at this point for those storms. I'm not going to say there aren't crops out there that could get some benefit, but it certainly will not be optimal. A lot of stuff has already started to turn there. Got some people harvesting already down in that area. So I don't think I think we missed our window for that to be max beneficial for the crops down there. In a shorter term, just looking at really poor price action on Friday for both corn and soybeans, I think that markets are going to have to kind of jostle around here for a day or two. As Friday technical action was poor, preceded by the previous Friday where we had some longer term type of reversals. So, we got a WASDE coming up, and we have quarterly grain stocks at the end of the month, which would also be right in line with end of quarter, end of month. It's interesting looking at still pretty sizable short positions in corn and soybeans. And there has not been any sort of a panic buy, even in soybeans on a 70-cent rally. There hasn't been, it's been pretty orderly. Corn, very orderly. And maybe there's not enough right now to get this thing a little bit more supported, but markets get overextended in both directions, and no one's going to wave a flag when it's time to rally. So I think we got a really big corn crop, and I think we've got a soybean crop that is probably leaking a little bit. So we'll see how it plays out.
No, it's good points. And you referenced the big short that's been in our markets, and they've virtually covered almost half of the corn piece. They Commitment of Traders showed them buying another 61,000 contracts of corn, 21,000 contracts of beans. So they have reduced that position pretty substantially, but in your words, in an orderly manner. It's amazing how they can get that done. So they are covering a little bit and taking that position down. Jace, one question: Northern Illinois combines week away. Maybe some guys start to nose in end of the week potentially.
Yeah, potentially. Nothing really rolling around here from the guys I talked to. I haven't seen anybody going. There's still a lot of green corn around. Even on our farm, stuff that we planted in March, it just started turning relatively, recently. So I'd have to talk to, I haven't talked to my brother here in a few days, but we're probably still a week, 2 weeks out from getting going. I imagine most people in our area look like that. So, I mean, I've heard that the guys who have gotten going are a little surprised at the moisture content when they got into it, so drying down maybe quicker.
Being lower, right?
Yeah, being lower when they actually got into it. That a little surprised, how it looked maybe not as dry as when they actually started rolling the combine. So, yeah, maybe we get going here pretty soon. Yeah, obviously not a lot's changed on expectations in Northern Illinois. Obviously expecting a really big corn crop, record stuff. Beans are always tough to tell, right? They've looked good for years, or excuse me, they look good all season. Turned maybe, a little early up here, but it's so hard to tell with bean yield. So
Yeah.
I'm anxious to get in and see what those first bean fields do.
Yeah, it's it's just interesting. Everybody you talk to is just really anxiously awaiting that northern half of the state of Illinois to see what ends up happening, because it's been the garden spot. So it'll be nice to get some anecdotal evidence of what we got.
Yeah.
And
yeah,
smiles
absolutely.
and nods from the east.
Yeah, well, we got the USDA report on Thursday, right? So,
Yeah.
I think the market's definitely going to be a little nervous going into it to see what direction we go from this last report, right? Obviously, we put out really big yields on the last report,
Yep.
And I think we've traded those yields, if not more, right? Big crops get bigger. I think the market tries to assume that it's going to get bigger. So I think the funds are going to be definitely keeping an eye on that. It seems like with Friday's action that they want to remain short, right? It was, if you're a fund or you're a long-term bear on grains and you have these short covering rallies and you go right to the moving average, and then they hammer it on Friday right at the point of where you should pile back into your short, is what it felt like, right? So to me, it seems like they want to continue to be short this and not try to push it through those moving averages. So I think the report's kind of a big deal. If they get away with doing it again, they're gonna have a lot of confidence that it's the right move to remain short these grain markets if this report shows big crop still, or we inch up the yield a little bit.
Yeah, I think that's a great point. And there's a timing aspect here that is tricky for longs and shorts, and that, we get this SEP WASDE. The USDA has typically been slow outside of really major market moving events to adjust yields. So if the short gets fed and unchanged or improved, they probably have reinforced to stay short into the end of the month, and until, just like you mentioned, we get into some of the best crops out there and see how good they are. I think the October WASDE is the one where we get a much better grip on, was there some damage over the last 4, 5, 6 weeks from poor finishing weather. So I agree. I think that they definitely should feel emboldened after price action on Friday of beans tapping the 50-day moving average and having an outside day lower close.
Yeah.
Very good. Well, it's gonna be a busy, exciting week. So we'll keep everybody up to speed on all things report. We'll have some estimates as we get closer to the report, probably in that Wednesday time frame. Ryland, let's quickly pivot over to cattle. Last week, you got a $4 break in fats and $6 in feeders, and what was interesting I saw was it came with a small net increase in open interest. So that's kind of interesting to see that kind of price action met with an increasing open interest there. Also, cattle slaughter down 11.3%, pork production off 4.1. What's your thoughts here as we start the week?
Yeah, no, you're right. It was kind of an interesting open interest, kind of a change in commitment, but it does kind of seem like the feeders were overtaking in the complex just from that alone. But overall, it was, there wasn't a huge change in open interest on the live side of the market. I mean, for as sharp as we were down, open interest was only down 986 contracts. And it was couple stories out. I think everybody's looking for a reason why we were down so much. But there was one that I thought was interesting. I don't know if this was any kind of catalyst or at all. Kind of feels like we just got caught off guard that we were seeing lower cash trade to the degree that we were seeing it. $3 down in the north, $2 in the south. Beef still lower here. So we know packer margins had improved kind of at the middle of last week. And now if beef can kind of stabilize here, and you would expect that if cash continues to go lower, their margins are going to improve. So I think you can maybe find a little bit of stability, but overall, you're kind of making new lows for the move here. The trend is still kind of negative. So just waiting for some good news. We just really haven't got it. But like I was saying, there was a little bit of news over the headlines that there was an anthrax outbreak up in Wyoming. Just a small head of cattle were actually tested positive for this. So, I think that's something to keep an eye on. I don't know if that's really a mover and a shaker as far as the grand scheme of things, but I know it was a talking point that several people raised with me on Friday. So we'll follow that as it comes. I don't know if the market's going to react too strongly to it unless it gets more widespread. So at this point, that's all we've heard. It's kind of a small amount. But overall, yeah, we're just watching it. Maybe we can find some better fundamental news, but at this point, it seems like trend's still lower and the managed money still kind of liquidating, but they really didn't move their position as of last Tuesday. So I imagine they're probably taking a couple of their longs off at this point.
Very good. Appreciate the update. We'll talk to you again tomorrow morning. Just open the grain markets here. We got December corn up a quarter now. 406 1/4 is the last. November beans off to a good start, up 10.5. 10.15 3/4 is the last there. And December Chicago wheat's down a penny at 5.66. If you like the show as much as we like putting it on, please give us a like or subscribe. Doesn't cost you anything to do so. We certainly appreciate everybody that tunes in on a daily basis. Throw us a like or subscribe. Gets you updates on everything AgYield and opens up all that premium content for you. So we certainly appreciate the folks that click on the like or subscribe button there for us. One thing to note, this afternoon we'll have crop progress and conditions at 3 o'clock Central. We'll discuss that in our evening commentaries and then certainly talk about it tomorrow morning on the War Room. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Thanks for the comments and thoughts this morning here, guys. It was a good conversation. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.